What's up, my fellow investors? Iggy the Investing Iguana here, and in this video, I'll reveal the top Singapore stocks you should consider buying in June 2024. Whether you're a seasoned trader or just starting, these picks could be game changers for your portfolio. For this video, we will be following the alpha picks by UOB Kay Hian Singapore research team. Get ready to take notes, because this is insider info you won't want to miss. Let's start with UOB's first stock pick, Centurion, SGXOU8. This company is a leading provider of accommodation solutions, primarily focused on worker dormitories and student accommodation. With the construction and manufacturing sectors in Singapore picking up steam, the demand for worker accommodation is expected to rise significantly in 2024. This increased demand bodes well for Centurion's business prospects, as they are well positioned to capitalize on the upswing in the industry. One of the key factors driving Centurion's potential growth is the anticipated upward rental reversions in the coming year. As existing leases expire and new ones are negotiated, the company is likely to command higher rental rates, reflecting the tight supply and robust demand in the worker accommodation market. This translates into higher revenue and improved profitability for Centurion, making it an attractive investment opportunity. Moreover, the company has a strong track record of operational excellence and a well-diversified portfolio of assets across Singapore and other regions. This diversification not only mitigates risk but also provides multiple avenues for growth. With its experienced management team and strategic focus on expanding its footprint, Centurion is poised to capitalize on the favorable industry dynamics and deliver solid returns for investors. The next company on my list of additions is Civmec, SGXP9D. Now, Civmec is an interesting one because they're involved in a wide range of construction and engineering services. From fabricating steel structures to maintaining machinery and equipment, they've got their hands in many different pies. The cool thing about Civmec is that they're what we call an integrated multidisciplinary provider. Basically, they can handle multiple aspects of a project under one roof, which makes things more efficient and cost-effective for their clients. So why am I excited about Civmec? Well, it seems like more and more projects are coming their way lately. Their order book is looking pretty healthy, which is always a good sign. When a company has a strong pipeline of work lined up, it usually translates to stronger earnings down the line. And that's exactly what analysts are predicting for Civmec in the coming quarters. With all those new projects they've secured, we can expect to see their profits grow as they execute on that work. It's kind of like when you've got a bunch of assignments or projects due for school or work. The more you've got on your plate, the busier you'll be and the more you can potentially earn or achieve. Same idea applies to companies like Civmec. A full order book means they'll be keeping busy and bringing in more revenue, which should boost their bottom line. So that's why I'm bullish on this multi-talented construction and engineering firm for now. The third addition to my Alpha Picks portfolio is SIA Engineering, SGXS59, a leading aircraft maintenance and repair company. As the aviation industry continues its post-pandemic recovery, demand for SIA engineering services is expected to soar. With more planes taking to the skies, there will be a greater need for maintenance, repair, and overhaul work, which bodes well for the company's earnings growth prospects. However, it's important to note that SIA Engineering's dividend history has been somewhat inconsistent. Over the past decade, the company has reduced its annual dividend from SGD 0.22 to SGD 0.04, a significant decline of around 82%. This could be a cause for concern for income investors seeking stable payouts. That said, analysts are projecting a strong rebound in SIA Engineering's earnings for the upcoming fiscal year, with estimates suggesting a whopping 86.1% increase in earnings per share. If these forecasts hold true, the company's dividend payout ratio could fall to a more sustainable level of around 44%, potentially paving the way for future dividend hikes or special payouts. While SIA Engineering's dividend track record is not particularly impressive, the company's prospects appear promising, driven by the tailwinds of the aviation industry's recovery. As always, it's crucial to conduct thorough research and consider your investment objectives before making any decisions. But for now, SIA Engineering seems well positioned to capitalize on the resurgence in air travel demand. Now let's look at the removals. ComfortDelGro, SGXC52, was taken out after posting a 23.8% rise in net profit for Q1 2024 to 40.6 million Singapore dollars, up from 32.8 million Singapore dollars a year ago. While the profit numbers looked good, driven by higher fees, fares, and lower rental discounts, there were some underlying concerns. The taxi and private hire booking volumes fell to around 7 million from 8 million a year earlier. Additionally, the public transport contract renewals in Australia came in at lower margins. So despite the profit rise, the outlook seemed a bit soft, leading to ComfortDelGro's removal. As for Mapletree Pan Asia Commercial Trust, MPACT, no specific reason was provided for its removal from the portfolio. However, based on MPACT's latest earnings briefing, we can infer a few potential factors. The global economic uncertainty, high interest rates impacting financing costs, and volatile forex movements have created challenges for the REITs. While occupancies remained strong in Singapore, large tenant commitments were hard to come by. In China, performance was a mixed bag across their office assets. So the overall operating environment seems to have played a role in MPACT's exclusion this time around. The UOB-Kay Hian Singapore research team chose to take profits on two particular stocks, Yangzijiang, listed on the Singapore Exchange as BS6, and Riverstone, listed as AP4. These two stocks had been performing exceptionally well since they were added to the team's portfolio. Yangzijiang, a leading player in the shipbuilding industry, and Riverstone, a prominent manufacturer of specialized rubber products, have both demonstrated robust growth and resilience in their respective markets. Their strong performance has significantly contributed to the overall health and growth of the portfolio. In the world of investing, it's not just about making the right choices when buying stocks, but also knowing when to sell them. This is where the concept of booking profits comes into play. It refers to the act of selling a stock when its price has risen significantly, thereby securing a profit. The decision by the UOB-Kay Hian Singapore research team to book profits on Yangzijiang and Riverstone is a testament to this strategy. It's a reminder that while the ultimate goal of investing is to grow wealth over time, it's also crucial to realize gains along the way. This not only locks in profits, but also provides the opportunity to reinvest in other potential growth areas. It's a strategy that requires careful consideration and timing, but when done right, it can significantly enhance the overall return on investment. The UOB-Kay Hian Alpha Picks portfolio, a carefully curated selection of stocks by the UOB-Kay Hian Singapore research team, has been demonstrating a remarkable performance. Over the past 5 months, it has managed to outperform the Straits Times Index, STI, a key benchmark index in Singapore that tracks the performance of the top 30 companies listed on the Singapore Exchange, in 4 instances. This is a significant achievement, considering the STI's role as a barometer of the overall health of Singapore's stock market. In the month of May, the Alpha Picks portfolio saw an impressive rise of 3.8%. This was a notable increase, especially when compared to the 1.3% gain experienced by the STI during the same period. Such a substantial difference in performance underscores the effectiveness of the portfolio's strategic composition and the team's adept investment management. The standout performance of the Alpha Picks portfolio was largely driven by the stellar performance of two stocks, Yangzijiang and Riverstone. Both these companies have been showing robust growth and resilience, contributing significantly to the portfolio's overall performance. Yangzijiang, a leading player in the shipbuilding industry, and Riverstone, a prominent manufacturer of specialized rubber products, have been consistent performers, delivering strong returns for the portfolio. Alright folks, that's a wrap on my June stock picks for Singapore. I hope this video gave you some valuable insights and ideas to explore further. Remember, I'm just an iguana sharing my 2 cents. Always do your own research before investing. If you found this content helpful, show me some love by smashing that like button. And if you haven't already, hit subscribe so you never miss out on my latest stock tips and analysis. I'll see you in the next one, where we'll dive into another exciting investing topic. Until then, stay green and keep growing that portfolio. Peace.